Hello, traders. This is Trader Geek Sam with your Sunday, February 22nd, 2026 market review and preview video. Hope you're having a great weekend. And I thought I'd show my face a little bit for a couple of minutes before we jump in and take a look at things for the past week and what's coming up for the next week. So, enough of me. So, here we go. We'll start with what happened on Friday, which was a pretty good day. Nice recovery after all the volatility from the GDP and the PCE news, and then the Supreme Court coming in with their decision on tariffs. So we had a topsy-turvy day, and we'll take a look at the charts in a minute. But uh, gold was the leading major market, if you will, up almost 2%. Magnificent Seven, a nice recovery, 1.64%. Bitcoin up almost 1%, and the Qs rallying about 88 basis points. VIX dropping below that 20 mark at losing 5.64%. Microcaps losing a little ground, as did the TLT, the 20-year bonds, and the dollar losing a little bit of steam. For the week, we had Magnificent Seven recovering 2.37%. Still remains to be seen if we saw a bear trap on that one. Gold up 1.25%. Mid caps still showing their strength this year, up 1.22%, and the VIX losing 7.33% on the week, dropping from 20.5 to about 19. Bitcoin still can't find its footing, down 1.5%. TLT down 35 basis points, and aggregate bonds basically fat. DIA lowest of the indices, but pretty good week for gold and mid caps overall. Looking at the monthly to date, we just finished an options expiration week, and the third week of February, we've got one more trading week in this 28-day month, with the VIX still up about 17%. Gold bouncing back almost 10%. Wow. For the month after a little bit of a pullback in January. And mid caps up 4%. TLT with yields dropping, the 20-year bonds up 3.3%. At the bottom of the list, it is Bitcoin, 13% down in February still. And then Magnificent Seven down 5%, with the Qs being tech heavy, down 2.77%. Microcaps down 1.5%, and SPY so far in February are down 86 basis points. Taking a look at the major markets for the quarter and the year to date, what's leading the way? Well, it's volatility. So they say it's the economy stupid, it's the volatility stupid. So here's the gold up 18%. Mid caps showing their strength, up 9%, and small caps still, despite their recently lackluster performance, up 7.5%, and the micro caps not too far behind, up 6. Dow Jones up 3.32%, but Bitcoin 23% since the start of the year, and Magnificent Seven not so magnificent, down 5%, and the Qs just down a little over 1%. And so far this year, SPY up a mere 1%, greatly underperforming kind of the rest of the world. So let's see if I can get rid of my mug here, and you can watch this without having to stare at my face. I don't want to either. Looking at the sectors on Friday, we had transports up 1.68%, rebounding nicely. XLC, basically Meta and Google leading the weight in that sector, up 1.44%. And consumer discretionary, with Amazon finally rebounding nicely on Friday. Tesla basically flat. Those are the two biggest components of the XLY. IYZ Telecom up 93 basis points. Energy taking a back seat, taking a little breather. It's about time, 0.54 percent loss, and then healthcare down 28. So it was kind of a more of a risk on day than risk off. Metals and mining just about 20 basis points. For the week, transports leading the way 3.12%, and communications up 1.94%. Industrials still showing their strength, 1.76%. And then I was telecom there, and financials bouncing back a bit on the week. At the bottom of the list, taking a breather were the staples, 1.81%, materials 0.66%, and XLV down about 0.5% on the week. Looking at the month to date, the 3 weeks, energy still leading the way, almost 10%, then utilities and telecom and materials up 6.67%. At the bottom, discretionary, again, mostly Amazon and Tesla, biggest components. Technology, no surprise, down 3%. Financials down 3 almost, and communications 2.4%. Looking at the quarter and year to date, GDX in the major industries up 24%. Solar stocks nicely up 21.7%, and XOP, exploration and production, up 20%. Semiconductors still holding their own, just like $5 from their all-time highs. ITB, home builders showing their strength with the decrease in yield, up 15%. At the bottom, software can't get out of its own way, but it does look like it's trying to find a bottom, and sooner or later we're going to see a rally in this one. I think it's a bit overdone, but what the heck do I know? Big surprise, I'm sure. Cannabis stocks down 20% in February. These things just cannot find the door, so to speak, to get into rally mode. FDN, that's internet stocks down 11.47, and cyber stocks on the backs of some news of AI. We saw CrowdStrike get hit pretty hard on Friday, and blockchain stocks down 6.38%. KWEB, that's the Chinese stock. So pretty mixed bag so far for February. PEJ, that's basically entertainment stocks. So not great so far this year, kind of half and half, but a little bit more weight on the green side. So let's take a look at Magnificent Seven on the week. A little better performance than the week before, with Amazon leading the way, rebounding, finally getting back above 200, and NVIDIA 4%, Apple 3.25%. Tesla losing a little bit of steam, but holding on to that 400 level, and Microsoft still trying to find its footing, down 1%, kind of being lumped in with all that software stuff. Meta bouncing about 2.5%, and Google also bouncing back and holding that 300 level as well. On a monthly basis, well, we got a lot of red, and other than NVIDIA, everything's down, and Amazon is the worst of them. So after they reported earnings, we're still down about $32 on Amazon. Same with Google, losing quite a bit, but recovering obviously a bit on Friday. Meta down 7%, and NVIDIA, again, the sole winner, Microsoft, down 6%. Tesla and Apple kind of flat on a year-to-date basis. So, or that's basically the month of February. But for the year to date, Microsoft, Clubhouse loser, almost 18%. Amazon, next in line, down 9%. Tesla, 8.43%. Leading the way, if you can call it that, NVIDIA, 1.78%. Rumors that they'll report earnings on Wednesday. So I guess we'll be treading water or playing more chop until they report. So as goes NVIDIA, as goes the market, we shall see. Google up 35 basis points. So year to date, we've got two of them positive, and Google barely positive. Meta barely negative, but 4 of them solidly going nowhere for the year. A little bit something different, courtesy of Kirk's Opportunities. Taking a look at some of the top 10 winners for the week. This list excludes crypto, leveraged, and ETFs and stocks. These are just essentially ETFs. Silver up almost 10%. Crude gaining 6. South Korea 5.9. Wheat and energy. Looking and just excluding leveraged ETFs. So this could include crypto and stocks, but still silver is in the lead. Crude oil pretty much look the same, except for Amazon gaining 5%. The rest of these are ETFs. When you don't exclude anything, it looks pretty similar. Amazon, wheat, energy doesn't look too different, but we have platinum and uranium leading the way. And you can see where the red comes in. Sports betting, Amazon in these different lists. Looking at it from the other perspective, the top 10 losers, this Destiny Tech 100 is kind of a private equity fund, and it's illiquid. It's terrible. And I don't know why anybody wants to put their money in this, but hey, if you want to invest in private equity, here's your chance. Cannabis, 4.8%. And if you look at the historical performance of this fund, it has not done well. It's lost about 2/3 of its peak value. So not going well just because you want to invest in pre-IPO companies. Maybe not the best idea. And I think it trades way above net asset value. So I would just stay away. Cannabis, big surprise there, right? And natural gas, despite bursts and spurts to the upside, still down 2% on the year. Japan down 2%. If you exclude leverage ETFs, Destiny 100 is there, and then same everywhere. So a little bit of something different here. And then finally, whoa, that's big. This is what Kirk calls the awesome portfolio. And basically, these are your stock funds or ETFs on steroids, 3x leverage stuff. So if you like chocolate-covered hand grenades, well, here's your chance. Emerging markets bulls on the week, up 5.91%. Look at that, up 44% on the year. Mid caps and next in line here, up 27%, and small caps. So what don't you see here? Other than this past week, the triple Q leverage Q up 3%. And here's the Max 7 for the last week. But where's all the red? Yeah, in the technology sector. So let's take a look at the charts now that we've kind of looked at ancient history. And we're looking at my typical and usual tri-pane. Better put this back to a daily chart. So for those new watching my video, I look at the daily, the weekly, and the monthly time frames for the major indices. I'm a top-down trader. So if we look at and see what happened last week, here we go. It was a shortened trading week. So we started Monday with a little downside action, and we bounced back. Further bounce on Tuesday, pulling in on Thursday, and then a nice rally on Friday. So it was a positive week, as we saw about 1% up for the S&Ps. And we did close above this blue line here, which is the 50-day moving average, and right at the middle of the Bollinger Band here. So I think this is portending a little bit more strength to come. You can see MACD wants to flip positive. This is the fast line. If it closes above the signal line, could give us a daily buy signal. But you can go back months here, and we're just in the same spot we were. In fact, you can see it more clearly here on the weekly chart as I get ahead of myself. But this candle is back in October. So we got up there in October, and where did we close that? That was 68.40. Here we are at 69.09. So on a $7,000 index, we are up 40, 50 points. Big whoop. Anyway, we have a bearish chandelier stop. That's a volatility stop, as well as a bearish parabolic stop in reverse. And here's that dot we need here, 69.60. So we need a close above there to flip that switch. And right around 69.65 here, if we can clear that congestion, we'd be good. And then if we can clear above, call it 69.85 or so, then we should be clear to go to all-time highs, as if getting that close would preclude us from doing that. But we have a bunch of resistance here. But I think the path of least resistance, at least over the next couple of days, is to take us up there and test that resistance once again. Here's the top of this ugly candle that we had on Thursday the 12th. And we have RSI, which is basically middle of the road, 51. Switching back to the weekly chart, bullish chandelier, bullish PSAR. So we're still in a range, and you can see doji, call it a doji, but a nice candle for last week. And you see here, I've cleaned up the drawings quite a bit for you guys, and then just including the options implied expected move. We'll talk about that in a minute. There's the upper edge. That's the lower edge. We are above the 8 EMA on the weekly, holding the 21 EMA on the weekly. MACD is still in a sell signal on the weekly, so the fast line right below, and it is tilted down. We have a little bit of RSI coming back at the 60 level. And so just if you went to sleep in October and woke up now, just kind of, we're up, we were down, we've gone nowhere, and we're just kind of holding on to that 6,800 level for dear life so far. Monthly, bullish chandelier, bullish PSAR. We're forming a bit of a doji on the monthly chart, but we still have 1 week to go, one more trading week in February. Nothing wrong with this chart. Looks great. MACD is solidly positive. Looks like it wants to flip negative and give a sell signal, but too soon to tell. Still overbought on an RSI basis, 75 level, and that's what defines a bull market. We get overbought and we stay overbought. So beautiful chart here on the monthly. Nothing to talk about or complain about. So we give this one to the bulls, this one to the bulls, and this one is going to the bulls. So the bulls have the edge. If we can get a close over the 69.60, I think despite the negative seasonality of this last week of February, I think we can head up. But I do think that we'll see some follow through unless there's some geopolitical headlines that derails things. We at least go up to resistance and test it. And then we can see after midweek where we end up. We'll see in a minute. The economic calendar is not that heavy this week, although we have a lot of Fed heads yakking away. Switching to the NASDAQ, come in. We have a similar scenario. We came in on Monday, dropped a little bit, bounced, and here we are. It's not as strong as the SPX, but here we are below the 21 EMA. There's our parabolic stop and reverse dot right there, 25,204. That's only a couple of points away, a couple hundred points. And that's nothing for the NASDAQ. Under the 100 EMA, under the 50. So a lot more work to do on the NASDAQ side of things. These purple lines that I'm highlighting, those are the 2 standard deviation Bollinger Bands. And this red line down here is a 200-day. So we never really got close to it. We still have bearish chandelier, bearish PSAR. So we want to flip those. There's the PSAR dot where my cursor is. And then you got to get up here, which is above this week's options implied expected move for the NASDAQ, which is about 616 points. So that would be a robust move. if strength returns into the tech sector. Once again, the MACD looks like it wants to flip positive. Got the signal line, uh, the fast line trying to turn and curl over to the signal line. So we'll see. Still well below the zero line, and we have RSI, which is dwindling right in the neutral level. Switching to the NASDAQ weekly chart. Interesting thing, we have a bullish chandelier, which is this line here. We haven't broken it, but we did take out a parabolic stop and reverse on the weekly. So that one is kind of a mixed bag here, but Friday kind of saved the day. It's better looking candle than we had for the week before. MACD is definitely on a sell signal, still above the zero line on a weekly. And we have RSI, which is at the 53 level. So it's kind of neutral at this point. So again, another sideways to go nowhere market. And in this case, this goes all the way back to September. Here's the week of September 15th. We popped above this line here, and here we are right about where we are. Where were we then? 24,641. Maybe this one is, yeah, 24,983. That's also in October. So basically a go nowhere, but we have a little mixed message from the volatility stops. And I'm going to wait and see what happens. But this is, if we take out this chandelier stop on a weekly basis, then it's going to portend more weakness. Switching to the monthly chart, bullish chandelier, bullish PSAR, and we've got more sideways actions that you can see on the monthly chart. Two dojis and another doji forming. We have a MACD looking to flip negative, and we don't get a sell signal until we get a monthly close of the blue line below the gold line. And here we are threatening to drop below the 70 overbought level. We'll see if we can bounce this. But again, we have one more week to go in the month. Anything could happen this coming week. But when we're looking at the overall, definitely bullish here, more monthly consolidation. Bullish to neutral on the weekly chart. We need to see a strength. We had this topping tail, and then we keep one time framing lower on the weekly. Daily chart is a mess. Call it neutral to bearish, unless we get back over that 50-day line and we cross this PSAR dot. Taking a look at the Russell 2000. We also have a mixed volatility signal, a bearish chandelier. So we got to clear this now. And a bullish PSAR, which is right here at the 26.25 level. You can see on these days, we touched it, but never closed below it. And the RUT or the small caps have a options implied expected move of about give or take 70 points. We'll see what we get this week, but you can see a lot of intraday action, topping tail here, nice candle, and then I call this the candy wrapper candle because we have the candy in the middle and the little ends of it, the wrapping. You can see MACD here is also trying to flip back to a buy signal above the zero line. We need to see more strength from the small caps than we've seen over the last week or so. On a weekly basis, bullish chandelier, bullish PSAR, those volatility stops are positive for more gains. And then more sideways actions. Here we popped above here in February or January, the first week of January, and we've gone nowhere but sideways. We've gone up, we've gone down, we've gone up, and here we are. MACD looking to turn down and give us a sell signal. We'll see if that happens. And we have a relative strength index at 65 almost. So closer to the overbought than the neutral level at the moment. Looking at the monthly chart, bullish chandelier, bullish PSAR. You can see this topping tail on last month's the January candle where we made a new all-time high at 27.35. This candle doesn't look too bad. Nice green candle and giving the edge to the bulls. Very nice uptrend above all the moving averages. We have a MACD that's solidly positive, no signs of rollover here. And who knows, maybe we could get overbought and stay overbought on the Russell 2000 small caps. We'll see. So we'll give this one to the bulls, and we'll call this one neutral at this point until we climb out a little bit higher and take out this bearish chandelier. So we have a lot of room with the Russell having about a 70-point expected move. Switching gears a little bit, I like to talk about the VIX. And as we saw earlier, we finally closed below the 20 level, but look at how wicky the VIXy is. And it's just a mess. It's just all over the place. Topping tail, a topping tail again with all that volatility on Friday. MACD on the day looking like it wants to flip negative. We are still above the 200-day, so that's kind of a line demarcation. If we get two closes below the 200-day, that in some systems is a buy signal, and we are inside of the Bollinger Bands. And so once we traversed outside of it and closed inside it, we're somewhat short-term buy signal, but I haven't trusted it much of late because it's been so volatile. But in any case, on a weekly chart, still MACD is solidly positive. It looks like there's more gains to come on a weekly basis. And then on the monthly, don't pay a whole lot of attention to it. But you can see the chandelier's bullish here, half and half, and bearish on the monthly. But VIX is basically not quite dead right now. Looking at the VVIX, the volatility of the volatility, we did close below the 110 line, which is my line of demarcation of concern. Well, 100 is, but over 110, then it means that there's lots of VIX call buying to hedge by institutions. But we closed at 108, still above the 100 area. So this advantage goes to the bears. And but how high did we get last week? Well, we did hit well, nothing like getting knocked out of think or swim while you're recording a video. Anyway, was talking about the VIX, and we closed at 1909 last week. So taking a look, what I like to do is go out to the next monthly expiration and take a look at what out of the money calls and out of the money puts are trading at, see who has the edge. So let's call it 19. And if we look at the 20 calls, then they're running about $2.10. So we go $1 out of the money and then $1 out of the money on the puts. Those are running about 85 cents. So a little bit over 2x advantage to the bears on the calls for the VIX. So not a big advantage, but it's telling you that there's more demand for calls than puts, and that puts a feather in the bears camp or cap, whatever you prefer. Just looking at the near dated ones, 80, $1.30, and yeah, so definitely even in the short term, you can see you can buy a 20 call, say for $1.05, but an 18 put will cost you about 15, 16 cents, give or take. So VIX bears, the bears have the advantage here, but this is one data point. I also like to look at the VIX futures to see where we stand. And at this point, we have a typical contango in the VIX futures, which means that the further you go out, the more expensive the VIX contract, which is normally what you'd expect with volatility being more unknown. The further you go out in time, you would expect it to be higher, and that's what we have. And all of these contracts are higher than the spot VIX, which is at the 1909 level. So that's the story with the VIX. And taking a look, I mentioned the SPX coming up, the expected move for the week. Last week, we had a 144-point expected move for a 4-day week. And since we had a little decrease in the VIX, we expect a decrease in the move, and we do. Now we have 136 points, let's call it, over 5 days coming up. So not a let up in volatility, but all you have to do is see a day like Friday. If I call up the daily chart, I've got way too much stuff on here. Get rid of my alerts. Okay, makes it a little cleaner. But on Friday alone, from 68.36 low to 69.15 high, and we closed near the high. So that day alone we were expecting about a 60-point move, and we got an 80-point move. So we could even move. If you count the futures, we were definitely more than 100 points that day. In any case, we have a 135-point move. I would take the over on that one, given the volatility we've seen. And just looking into Monday alone, we're expecting 62 points. And for that, let's take a look at and see what we have on the economic calendar. Make this a little bigger. Monday, nothing. Factory orders for December. I mean, how stale can that information get? That's at 10 a.m. It's for December. Tuesday, like I said, lots of Fed head speakers. Case-Shiller home price index. Home statistics have been just coming in terrible of late. So we'll see what this has to say about it. Lots of Fed speakers, wholesale inventories, big whoop, consumer confidence on Tuesday. Nothing on Wednesday, just more Fed heads, initial jobless claims on Thursday. And then Friday, we have delayed reports from January, the consumer price index, core PPI, and or producer price index, not consumer price index. Sorry about that. Core PPI year-over-year, construction spending, and who doesn't want to know about the Chicago Business Barometer? So not a lot heavy economic calendar week here, and just a lot of Fed governors yakking it up. Taking a look at the earnings schedule, which is kind of winding down for this quarter. Some names that you're familiar with get the door. It's Domino's, Home Depot. We're going into some of the retail reports. Kava, Workday, just been hit. HP. Wednesday, more retail with TJX. Oh, and there's this little company called NVIDIA. Salesforce, Snowflake, Trade Desk. This stock has been decimated and gotten even worse with the software. Nutanix, if you've heard of them. On Thursday, Baidu. We've got Zscaler, Dell reporting. And on Friday, nothing really to speak of in terms of earnings. So we are winding down this earnings season, and we're going to see a lot of the retailer stocks report soon. So overall, I think the bulls have the advantage over the next couple of days. Still a choppy mess. And this is a short-term trader's market, and you got to trade the volatility. And if you are going to be a very short-term trader, you got to get in, get out before your profits disappear. It's a choppy mess, unless you're uh, a put seller or an option seller. You got to take your profits while you have them. Even when you're a put seller, you got to make sure you don't get run over by anything that might happen. The news can wallop you. But overall, this is the last week of the month, so there's some shenanigans there. There is news that can come out of nowhere, geopolitics. We already got the news out of the way on the Supreme Court decision for the tariffs, but who knows what else might come out of there. We still have that partial government shutdown going on. So lots of fun, lots of things to pay attention to, but the most important thing is to manage your risks, take your time and your picks, and you get the big sell-offs, then use them to your advantage and stock up on the stuff that you might want to own for the long term. In any case, I hope you have an enjoyable rest of your weekend. Appreciate you tuning in. If you have any feedback for me, at Trader Geek on Twitter, Trader Geek Sam in the rooms, and I will see you next week. Thanks for watching. Take care and have a great trading week. Bye bye.